So obviously, they're going to be moving away from the dollar. That's why the price of gold keeps hitting new record highs. Gold stocks, the silver stocks, are dragged behind very reluctantly. Every once in a while, they make new highs, but then they get clobbered the minute gold goes down $50. It's like, oh my God, this is it. It's going to crash. But once we really get north of 3,000, 4,000, who knows? You're not going to have all that negativity surrounding the gold bull market. People are going to accept that gold prices are going up. And it's really not gold prices going up. It's the value of the dollar and other fiat currencies going down. Silver is cheap relative to gold. And so the price of silver has got to go up. I mean, there's nothing guaranteed in life, but to me, this is about as close as you're going to get. Silver prices are going to go up.
The renowned speaker Peter Schiff discusses the decline in the value of the US dollar and other fiat currencies, suggesting that this trend is driving the price of gold to new record highs. While gold stocks are climbing, silver stocks are lagging behind and reacting sharply to minor drops in gold prices. However, the speaker believes that the market will accept the gold bull run once gold surpasses $3,000 or $4,000. This isn't a result of gold rising, but rather fiat currencies devaluing. Silver is seen as undervalued compared to gold, and the speaker is confident that silver prices will increase. The speaker, Peter Schiff, an American economist, financial commentator, and CEO of Euro-Pacific Capital, is known for his bearish views on the U.S. economy and the global financial system. He advocates for a complete separation of money and the state, where the free market determines what constitutes money. Peter criticizes the current monetary system, where governments can create fiat currency without intrinsic value. Peter argues that a central bank digital currency, CBDC, would give the government even more control, eliminating financial privacy. The Bank of England is advancing its exploration of a potential UK CBDC. Recent updates highlight consultations and technical development that will shape the future of a digital pound, though no decision has been made on its implementation. The speaker, Peter Schiff, expresses concern that a fully digital currency system would allow the government to manipulate the economy more directly by issuing money with expiration dates to force consumption. This could artificially stimulate the economy, but the speaker argues that such efforts are ineffective. Jerome Powell, the chairman of the U.S. Federal Reserve, has spoken about the potential implications of a digital dollar, including the ongoing research and discussions around CBDCs in the U.S. If you enjoy the video, please give it a thumbs up and subscribe to stay updated on our latest content. Currently, only 11% of our viewers are subscribed. Help us reach our goal of 1,000 subscribers by hitting that subscribe button.
We'd have a complete separation of money and state. I'd like to have the free market determine what money is and let the government collect taxes in whatever the people are transacting in. I don't like the government to just be able to conjure money into existence out of thin air that has no fundamental value to it. So that's the inherent problem in our current monetary system, the fact that we don't even have any money. It's just all based on fiat. But I think a central bank digital currency would be just even worse than what we got now, because I think the government would have even more control over the money if it were digital, because at least when it's physical paper, yes, if you transact through the banking system, through your credit cards, debit cards, PayPal, things like that, yes, the government can figure out what you're doing, but you still have a way to be private and you can use cash. And I'm not talking about, well, I'm advocating for criminals to be private. I'm just willing to tolerate that so that honest people can have privacy. And that's what keeps the government honest, because if they know that people have no privacy, they're more likely to oppress them because they know that organizing any kind of resistance is more difficult. So we have to preserve individual liberty and a right to privacy and the ability to transact, not because I want to do something illegal, but because I don't want the government knowing every legal thing that I do. And of course, they may criminalize a lot of conduct that is perfectly legal today. What the government does would be illegal. The government would be unconstitutionally outlawing what should be lawful. And in that case, it's the government that's the lawbreaker. But the government, if they take away our cash, then they make it more difficult for us to get around their unconstitutional laws. But that is where they're going, And of course, it'll be even easier to, manipulate the economy, because if they could just load up our digital wallets with cash that has an expiration date, they could really say, okay, everybody go out and spend right now. And if you don't spend your money, it's gone. And really try to, micromanage, consumption spending, because they always try to stimulate the economy. Right? But of course, the stimulus doesn't work, but they do it anyway. I've thought that for a long time, and it's been cheap for a long time. I mean, if you look at the gold-silver ratio, silver is cheap relative to gold. And so the price of silver has got to go up. I mean, there's nothing guaranteed in life, but to me, this is about as close as you're going to get. Silver prices are going to go up. Right? Silver was $50 in 1980. I mean, how many things could you buy today for less than they cost in 1980? I mean, other than electronics, like a television or something, but a commodity? I mean, silver is a bargain, and, you got to buy it. I mean, I've been talking about it for years, and, I remember when silver was under $5, under $4, when the century started. So it's been going up, but it was so cheap, in 2000, 2001, with $4 or $5. Gold was under $300 an ounce. Gold has gone up more than 10x. So far this century. It's almost, not quite 10, but nine times. The Dow is only up a little over 4 times. The Dow was about 10,000. Now it's a little over 40,000. So in terms of gold, the Dow has actually gone down. But it's still, I think, expensive relative to gold if you take a broader historic look at it. So the stock market is expensive. What's also cheap is oil. Oil prices are very cheap. You can get almost 40 barrels of oil for an ounce of gold. That is historically cheap. That means that oil prices are not going to stay at this level. They are going up. And that is bad news for the CPI, because it's going to weigh heavily into headline CPI. But all this, I think, is going to occur against the backdrop of a U.S. recession, which means real interest rates plunge even more than nominal rates. We go back to quantitative easing, and that's going to send gold and silver to new highs. It says that for silver to hit new highs, it's a much bigger move. That's why people should be buying it. We sell physical silver at Schiff Gold.
In an interview at Commodity Culture, Peter Schiff highlights that gold mining stocks are historically cheap, and despite gold being near record highs, sentiment remains negative. Rising inflation costs have hit gold mining companies, but gold prices have now broken out of a long consolidation. Peter believes the price of gold will outpace mining costs. Companies are in a strong position with improved balance sheets and low input costs. Even as gold prices rise, supply won't increase significantly, leading to a supply-demand imbalance that will drive prices higher. The speaker, Peter Schiff, explains that inflation stems from the Federal Reserve monetizing government debt, and with record-high deficits, inflation is set to rise even more. The Fed's upcoming rate cuts may lower short-term rates but increase long-term rates due to inflationary pressures. To combat this, the Fed is expected to return to quantitative easing, QE, next year, to artificially lower long-term rates. However, this will lead to even more inflation. Politicians avoid addressing government spending by using inflation to reduce purchasing power, shifting blame elsewhere. The speaker, Peter Schiff, predicts that inflation will continue to rise, and the Fed may need to hike rates again if the dollar weakens. Let's recall the interview.
I own a lot of gold mining stocks myself. It's by far my biggest sector that I have in my personal portfolio. And I added, considerably to that position earlier this year, back in February, March, when gold was still close to 2,000 but above, and Barrick and Newmont were hitting multi-year lows based on downgrades by Wall Street. I hadn't anticipated buying more, but I don't look a gift horse in the mouth, and so I took what the market was giving me. But I think that these stocks are historically cheap. The sentiment is historically negative. I love being a contrarian. Normally, how do you buy gold stocks when gold's at an all-time high and be a contrarian? Well, you can, because nobody expects gold to stay at an all-time high. People expect it to go down. And, for many, many years, the gold mining stocks were the ironic victims of inflation. And people just assume that that's the new normal. And why they were victims of inflation is inflation drove up the cost of mining. But the price of gold didn't go up as much as the cost of mining it. And that was because people didn't realize that inflation was actually as bad as it was. And so that hurt gold mining profits. Even though, yes, we can sell our gold for more money, it's costing us even more to get it out of the ground. Well, I think now that gold has finally broken out of this consolidation that it's been in since 2011, I think that gold is going to outpace the cost of mining it. Especially now, like I said, oil has never been this cheap. Priced in gold, that's great for the gold mining companies because that's a major input. Also, their wages. The dollar has been relatively firm, and so the wages are low compared to where they would normally be with a big gold rise. Normally, the dollar is falling against a lot of these currencies where the wages are denominated. But that hasn't happened. So I think these companies are in great position. They've also cleaned up their balance sheets over the years, paid off debt. They're generating tons of cash right now, the big companies, trading at ridiculous valuations relative to what's historically been the case. Gold price is 3,000, 4,000, 5,000 higher. You're not going to see a lot of new gold coming to the market to take advantage of those higher prices because the industry just doesn't have the ability to produce it. It's going to take time to bring a lot of these mothballed mines back into production, and it's going to take even longer to find more gold. So we're not going to see a big increase in supply. We'll see some, but nowhere near the increase that we're going to see in demand. It comes from the Federal Reserve monetizing government debt. Well, government deficits have never been this large, and so we're going to have more inflation than ever before. Just a question of when does the Fed go back to QE, and I think it happens early next year. The rate cuts are just the beginning. The QE is the next part because the Fed wants to get long-term interest rates back down. It wants to help the housing market. Well, just cutting short rates isn't going to do that. In fact, long-term rates are likely to rise despite these rate cuts because they are inflationary and the Fed does not control the long end of the curve, which has to price in the higher inflation that results from the easier monetary policy. So I think at some point the Fed is going to go back to QE in order to artificially suppress the longer end of the curve because it can print money and buy those bonds to push down the yield. But that's just even more inflation. And so it's coming, and again, the politicians are not leveling with the public. They're saying we don't have to have any cuts to government spending. We can get all the Social Security we were promised. In fact, we can get more. Donald Trump says, hey, we're not even going to tax your Social Security benefits. So we're going to get more Social Security benefits. We're going to have lower taxes. Well, that means we're going to have higher inflation because we have to pay for government somehow. And it's clear the only way politicians are willing to charge us for government is through inflation. They just took our purchasing power by creating money, and now they can blame it on greedy businessmen or Putin or speculators or whoever is the scapegoat of choice, but they won't accept responsibility. So we're going to have a lot more inflation. I do think that the Fed's rate cut cycle is going to get aborted before they get back down to zero. I mean, I don't know that they'll make it all the way back down because I think that the foreign exchange markets may not cooperate and we could go into a free fall with the dollar. Inflation could really start to get out of control. And so the Fed may have to start hiking rates.
The speaker emphasizes the impact of inflation and the devaluation of fiat currencies on gold prices, highlighting the opportunities in gold mining stocks which remain undervalued. He also warns about the potential dangers of central bank digital currencies and government overreach. The speaker predicts more inflation as government deficits grow and monetary policies such as rate cuts and quantitative easing, QE, persist. He foresees a continued demand for precious metals as gold prices rise and supply remains limited. How does the speaker view the relationship between fiat currency devaluation and rising gold prices? Why does the speaker believe that central bank digital currencies threaten financial privacy? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel first, watch the video, and turn on post notifications for more videos like this. Until next time.